right, welcome to the broadcast. We got mortgage expert here. So if you got questions, he got answers. But first, what we're going to start with is because um everybody's worried about this soft landing, this recession. What's going on here? We get a soft landing recession. So I'm going to go ahead and ask this mortgage expert, right? Because he sees things from a different perspective than I do. Are the soft landers, Josh, are they just too excited about the soft landing? What are your thoughts on the soft landing? Are they too
Oh,
excited?
I mean, I think there's a little bit too much jubilation about the economy and a soft landing happening. I mean, it's the data is starting to show a little bit more information that's giving us some data that shows that the inflation's coming down. I mean, the PPI report came out today, almost flat, and that's definitely not something a lot of people expected. So I think what the Fed did, like I said before, the Fed's done a great job, and I think if they can hold off on any decision making as far as raising rates or lowering rates, we could see inflation come down. My only concern is the jobs, right?
Right.
Unemployment, that sort of stuff. I don't necessarily think that the soft landing is a for sure thing, and I think if we keep an eye on unemployment and job creation, I think that's going to be what really is the telltale sign as to if we are going into a soft landing or if we're going to see a pretty major hard crash as far as a recession of some kind.
Okay, what would you assign the probability of a soft landing and a hard landing? If you
I
had to
mean,
give a
right now I'm kind of 50-50. Like I said, with the inflation numbers coming out a little bit cooler than anticipated, and really showing signs that inflation is still moderating and coming down a little bit, I really think if again the Fed can hold off and we can see inflation come down where it needs to be, we could hit a soft landing. But my fear is that they're going to have to wait too long for that to happen because of their target rate being 2% and wanting an average of 2%. By the time that happens, we may see, like I said, unemployment tick up into the 5% range. I think we had that conversation last time.
Yep.
And and again, we're talking about there's a lot of pressure for increasing wages, and that is wage inflation. So there is that piece of it as well that we have to see play out in the economy as far as jobs are concerned.
Okay, wait, that makes sense. Here's something. Let's look at this really quick. So Atlanta Fed GDP just came out with this. This is the GDP now estimate. They're pretty accurate on the last quarter. They said like 5.2%, came in at 4.9. So they were pretty accurate. They actually increased the forecast. I think it was this week from 2.1 to 2.2. So for me, I think I'm the soft landing camp. I'm gonna say I'm about I'm pretty bullish. I think I'm gonna go 80% soft landing because I believe the Fed is more selfish. Also, Biden, I think it's more likely we hit, inflationary pressures a little more than we actually do go into a big recession. If something breaks, sure, but I'm gonna go with 80-20. And the GDP, at least in this quarter, we're not having a recession.
Yeah.
GDP went up. It's not going higher, but we're not seeing if they ticked it lower, I'd be like, okay, I'm a little more worried. Right. So we're not seeing that so far. And I don't know. I think we're getting closer to figuring out what they're going to end up doing from the government or from the Fed, because now I think the inflation picture is now shifting towards, all right, I think it's over. They're done hiking. Are we going to get a recession? Where does it come from? So consumer spending is about what, 70% of the economy. We know
Yeah.
services are still pretty hot. We actually got some new data here. Now here, let's read this data. Services are pretty hot, but the manufacturing sector, that actually the PMIs, you probably saw the PMIs in the last one. The new orders sank. ISM went from 49 to 46. It went right back down. That surprised me. I was pretty surprised. Were you surprised by that, or did you expect that?
No, I think we had that conversation. I said I thought I saw maybe it flatline or maybe drop a little bit, but I definitely thought it was going to flatline. I didn't think it was going to rise anymore. Again, you're dealing with some issues not just in the United States. You've got global issues, which is going to have an effect on the service and the manufacturing industry.
Right. Well, let's go with the consumer then, because if we do get a recession, I mean, governments are going to keep spending. it probably comes down to the consumer. So we got some new data here from the conference board. I don't even know who this is, but it was a pretty elaborate report. And what they're saying is that consumers under 45 years old, which includes me, where you at? Are you over or below?
I'm under. I'm
You're under.
under.
Okay, we're the same cohort here. All right. So
Yeah,
consumers
bro.
under 45 years old, they're spending less basically going in the Christmas season, going in the holiday season. Above 45, they're actually spending more. Okay, that's interesting. Slightly more. And the more purchases are happening online, gift cards,
Yeah.
and then second to gift cards is going to be vacations, travel. I think those are the two that we're looking at here. The primary was gift cards, making it a little more easy for people to access whatever they want. Vacations and travel, which is the services sector, and then fewer people are planning to travel here. So there's a lot to unpack there. I think possibly that fewer consumers planning to travel maybe helps with the whole inflation picture, because that lowers the demand for oil to some degree. Gasoline prices, we see those falling a little bit. So it's weird because it's like things are slowing, but they're slowing to the degree where inflation comes down. So it's like, do they really slow or do they come back? When I see my account go up, I'm like, oh, I'm gonna say, yeah, I'll go ahead and buy that. I'll go ahead and buy that. So we're seeing that now. I think the real question, did I put it on this one? No, it's not in there. Is will the do you think the older cohort can pretty much make up for the younger cohort in spending from and I know spending is slowing a little bit, but from like really hard recessionary data, if you had to like put an anchor on it, do you think we lean more towards staying stable because of this data, or do you think that it doesn't matter? I don't know if that makes sense. Let me see.
Yeah, I think that chart right there. That was what I was going to
There we go.
reference. I think that chart's a good kind of view of what you're going to see, and I think we even had this conversation. It's the wealth effect, right? So a lot of the
Right.
45 and up, they've either retired or they've planned for retirement, so they've got money in the stock market. As the stock market rallies, they're looking at it as, hey, we made money. We can spend a little bit more. So I think that's what you're seeing. I mean, like I said, I just had a conversation with my boomer father the other day, and he was telling me, he's like, yeah, I'm so excited that the stock market went up. That eases my mind as far as some of the spending I'm doing. And he retired. So he's on a
Mm,
fixed income. So he's looking at it like, hey, my stock prices have gone up. I've got a little bit more money I can play with. So I think as long as the stock market continues to stay strong, yeah, you're going to see those numbers continue to kind of shift more towards the 45 and up. My only concern again is if the stock market doesn't continue to rally and we see it start to taper off, even lose some, you're going to see the 45 and up stop spending as much. And obviously, the 45 and under are already cutting their spending, planning on cutting their spending. Many of them are having to figure out a budget to be able to afford housing, shelter costs, the staples. So you're going to see them spending less. So I think as long as the stock market can continue to do some sort of rally or at least continue upwards, you're going to see that graph kind of skew more towards the 45 and up. And it could definitely offset. I mean, it's showing that it's offsetting right now. I would not be surprised if that's the case. But again, it's going to be reliant, I think, on the stock market as far as that demographic and what they're looking at as far as how they're planning on spending.
okay, yeah, that makes sense. So they're definitely, that's going to help them out, eases the pressure a little bit. So I'm thinking too, I think there's another catalyst here, which is fixed income, right? You're getting 5% returns. Now, maybe this isn't the whole cohort of, boomers or whatever that are excited about the stock market, but the top, and I always wonder this, the top like 10% or 1% of spenders are basically people who don't care about the stock market. They're rich as hell anyway, right? So, and they're making extra off their cash. I did the calculations last night. I'm like, okay, how much do I need to bring in for every, so here's what I did last night. I was thinking about this. Oh, at the end of the crypto cycle, maybe I put it in some money market funds or some high yield. And then, how much can I live off? So what I got was for every $25,000, if rates are at 5%, or if you're going to get 5%, for every $25,000, you're going to get $100 of a month of income. So you
Yeah.
probably need, so to get about, I think it was $1 million of cash in the money market funds or high yield at 5% would give you I think it was about 4,000. somewhere around $4,000 a month, and that might look, hit or miss, up and down, about $4,000 a month of income. And I thought, that might be okay. So I'm thinking, okay, if these guys are putting in millions, right, tens of millions in cash, or they're probably just spending it. Like they're probably just living off of it. So that makes me think if they have so much wealth, that just creates jobs in these specific areas, right? Which is e-commerce. Well, maybe not e-commerce, but kind of what they cited here, which was vacations and travel. We're pretty sure they're buying vacations and travel. So there's going to be more jobs available. Maybe we never get back to full-time jobs, right? But I think the short-term jobs or seasonal jobs, those might stick around, is what I'm thinking, because these people just keep spending. Does that make sense? Does that idea make sense?
Yeah, no, no, no. I mean that makes total sense, and honestly, I think that's a lot of what's going on. And I think if you can see, I mean, you're right. I mean, most of these guys are looking at it from a fixed income perspective. Hey, I can park my money in a money market, or even bonds, and they're looking at it from the perspective. We can live just off the interest. We're not going to tap into the equity part of it, and they can live comfortably, and so they can do things like splurge a little bit from time to time, go on that travel that they were hoping to do when they're retired.
Right. So, and two, I'm thinking if they can keep doing that, the biggest enemy really is inflation, right? That has to be the
Yeah,
biggest enemy for most people. I think I saw a survey, they were talking about it, where people were like, do you feel better or worse? Even though you have more money, your stocks are up. Do you feel better or worse than you did in 2019? They said worse because they
yep.
have to keep seeing those prices, and it pisses them off, versus, well, my market, I might be worth more, but they're still more pissed off that they have to pay those higher
Yeah,
prices.
they're
So
having to spend more. I mean, but I think it's interesting, right? Because I think a good indicator for this would be the PPI. I mean, if you think about it, are the producers that are going to produce the goods that we're going to be purchasing, they just saw a flat number as far as the cost for those goods to produce those goods. That's that means that they should be at the end of a cycle of hiking those prices. They should be able to either stop hiking prices or give some of that back. But then again, we're in the season where they need to start showing some returns, so you can see some profit margins increase for a lot of these companies, as their fixed costs kind of go down.
right, 100%. And that's why I think I lean a little more. I'm more optimistic. Obviously, anything could happen. But I'm younger than you. I take more I'm probably more naturally riskier, so I'm always optimistic, right? But when it doesn't work, I get crushed. So, but look at producer prices, 0%. I was like,
Yeah,
damn, okay, month on month,
yeah,
0% inflation for producers. So, and that's probably why the stock market's up so much, because profit margins are actually growing while
yep,
revenues come down. Your profit margins going up, and that was a big surprise for a lot of people. So, yeah, look at PPI is down at 2.4%, starting to roll over. Core, this was not core. Did I mess that up? Oh, I put these both on core. This I messed this up. Either
yeah,
way,
yeah,
core, it's core that's at 0%. So core
yeah,
is at 0%. Wow. Okay, that's a big change there. So you got core at 0%, and I think the Fed is pretty much done at this point. It feels like, they're done. They're done hiking, and it's going to come down to how the economy, I believe, how the consumers start to adapt. And I think this is part of that adaptation. You're getting more e-commerce on a secular trend basis. Either way, you're getting more e-commerce, so more people are purchasing online. And the question is, okay, well, that money goes into who? Amazon, um, Meta, right? I think the Magnificent Seven just benefit the most from this
yeah,
stuff. And
yeah,
I heard also that Walmart. So this was interesting. I know this is kind of off, but I heard that Walmart is crushing Target, not the stock price, because Target went down so much they got bought up, but Walmart is crushing Target for earnings because of their grocery, right? Because of their grocery. And then Amazon's crushing both of them because everybody's buying everything online. So it's just the economy is shifting so much. And I think where there's weakness, where you see weakness, there's that weakness turns into strength somewhere else, or it doesn't turn into strength, but there's strength somewhere else, right? Amazon's is benefiting from that. Now here's the labor part that kind of sucks. They're also building robots, so at a
yep.
very fast pace. So this is
Yeah, and I think we talked about that last time, right? As
yeah,
technology advances, you're going to see fewer and fewer jobs, even though their profit margins are rising and they're able to, bring in more employees. They're less likely to hire more employees, especially at the higher costs. and do things like robots. And Amazon's, a giant warehouse pretty much everywhere. So they don't need employees going and filling orders. They can put robots in there and fix and fill those orders at a lower cost. And it increases their profit margin and it lowers their costs.
Yeah, this is gonna have to come down to government. You know what? I guess we'll get to that China relations, all this stuff, because I think at the end of the day, we all know there's a big debt bubble. You know, Ray Dalio talks about it all the time.
Yep.
It's gonna pop. It's gonna pop. I don't think it's going. I don't think we're gonna see it. I just think the information is coming too quick. Is a possibility there? Yes, but I think also the policy at the White House is going to make a big difference here. Do we go to universe? What's your stance on universal basic income?
Mm.
Because like that's the only thing I can see that happens
Uh,
here.
I knew you were coming with that one. I mean, obviously, in a society where technology is taking over the jobs and people aren't able to be employed, that is kind of where you have to head. Do I believe in it and agree with it? I don't think so.
Hmm.
Again, you're talking about where's the money going to come from? Because most of this is going to be tax funded. We already know that most of the wealthy are pretty good at avoiding paying taxes. So, does the government have to start printing more money to be able to offer universal income? Or do they find a way to tax the rich even more and drive them out of the country where we're already globalized? We just talked about our relations getting better with China. China's kind of getting ready to bend the knee because they need us to get out of their economic problems, just like we need them for our debt. So there's a big issue here that I see, and I don't know that anybody has the answer as to where the money for the universal income is going to be coming from. So I think that's the next big question. If yes, that's something we need to do to help society, how do we fund it?
You know what? Let's go ahead and jump into the China relations. What the hell's going on? Because I was like, hey, I'm even more bullish because now Biden is, my mom, she's a hardcore Trumper. And so anything positive with Biden, she's like, that's negative, even if it contradicts itself. But I'm like, hey, he's talking to, they criticize Trump for talking to Putin and all these other guys, and now Joe Biden's doing it, and I'm like, hey, well, are you gonna can you criticize him? He's actually making relations here. China is, I always say China. It's always about the economy. China needs, and you tell me, you know more than I do. China needs a deal to happen. We all need to kind of coerce or negotiate a deal so that helps both of our economies, because what's the point in being having differences, because if your economy sinks, you're done, right? So what are your thoughts on the
Yeah.
China relations going on right now?
Well, I mean, obviously, him coming to California was a huge thing. Biden being there. Don't get me wrong, there were some mishaps with some of his conversations, some of his interviews. I think he referred to Xi Jinping as a dictator in a question, which it's funny because there was a video and it was a meme of his head of press just cringing as he's talking and saying this. But I mean, at the end of the day, it's got to have to happen, right? We have to, with how globalized we are and how far behind we are on manufacturing and being able to kind of isolate ourselves and take care of all of the things that we need to build our economy. We are heavily reliant on China and the goods that they produce. So, what better way to help with everything, by creating some sort of relationship with them? And obviously, they're in need of us because of their real estate problems, their economic problems. So, it's a kind of a need to happen type thing, and I think both of them are very eager to do it. But I do believe that China's more on the side of, hey, we desperately need this. So we could see, I mean, as long as we don't screw it up, as far as the relationship's concerned, by saying something that offends him, we could see a pretty good deal struck between us and China that kind of gives us a little bit more of the upper hand in it, and I think that would be very positive for the economy and the big boys. But the consumer is still going to be kind of hurt by this because if we're reliant on China still and we're giving them more of the production side of things, we're going to see less jobs being created in the United States with this deal. but it will help with the cost of things. It will help with the production of things. I think it's a good thing for the U.S. economy.
I saw that they're actually set to increase production of oil also again. So I think there's something I've always said there's something geopolitically going on because the war never sparked anything crazy. I mean, we're still wondering what the hell's going on there. And so I'm thinking we're at the point with inflation, inflation being so high over the past 3 years. I think most governments are saying, hey, I think it's in our best interest not to fight each other because we're gonna go broke and we're gonna have, we're gonna collapse and we're gonna get voted out, XYZ, whatever, right? So
Yeah,
a lot of people like to say China owns the US. I still hear that. We owe China. I think it's because they buy a lot of our debt, right? That's why people say that.
yeah.
But it's more so supply chains. We're connected on both sides. Where do you think the breaking point is? My assumption is China more than anything wants better technology. We know they still are tech, so it's the chips. I think the breaking point is where the chips are at. They're like, "Hey, can you guys give us some better chips because we know Nvidia's, we're kind of pulling back on giving them the best chips." Where do you think the breaking point is for them where they're like, "Ah, who cares if they offend us? If we get those chips, we get those chips." What do you think?
I mean, that's a great point, right? So again, we kind of have the upper hand in the negotiations on this side of things. So I truly believe that this is a win-win for the U.S. Again, they're going to have to walk a tightrope with it because, again, China's viewed as the number one enemy to the United States, and they've got to worry about what the public sees and perceives. So as long as they can walk a tightrope, China's going to get what they want, which are going to be the chips, and we're going to get what we want, which is the goods.
Right? The goods. And then you're gonna get more criticism, and I'm trying to be bipartisan here. Oh, he made a deal with China. Those are enemies. Hey, you remember, guys, Trump, what did Trump say? Keep your enemies close. Now, is it really Biden doing this? Probably not. He's, but whoever's controlling, whatever. So you got to keep your enemies close. I'd rather them be talking, with Putin, whoever it is, because that assures me that somebody's, selfishness, greed is good because both parties want the best for each other versus if you don't speak at all, like that's where you get anxiety rising up and stupid choices, whatever it is. So it's better that we do talk with our enemies, keep them close, know what they're up to. And yeah, so and then you kind of talked a little bit about like taxes and stuff. I know we talked about this earlier. Let's talk about, what is the
Ah,
problem with taxes right now? You tell us what is the issue with the tax code, and then we'll go from there.
well, I think a lot of people kind of hit the nail on the head when they talk about it, right? We are taxed on the money we make. We're taxed on the stuff we buy, and then we're taxed again. I mean, so we are constantly being taxed. So every dollar we make, we're really only making like 40 cents on the dollar, maybe 30 cents on the dollar, and regardless of where you are in the tax bracket, right? And that is for everybody, but those who have learned to game the system. I think somebody made a great point. You're taxed less on investment money than you are on working for your money. So we're incentivizing people to invest versus work. Where does that work as far as the tax code is concerned? Where do we find a way to kind of avoid this? And you get back to the old adage, right? Income tax was only created to help fund wars. It was abolished, it was brought back, it was abolished, it was brought back. So we've been in this long period of time where we've been seeing these income taxes going up, going down, changes to it. But at the end of the day, where do we find a way to increase revenue for the government without taxing the people more? Because at the end of the day, if we're taxing people so much that they just decide, hey, I can't afford to even work and pay these taxes because I can't pay my bills because I'm being taxed on every dollar I make, 40% of what I'm making. So where do we find the fine line? Don't get me wrong, we have the most extensive tax code in the world, but I think at the end of the day, that extensiveness is what's causing the disconnect between the rich and those that are working every day trying to earn a living, because most of us don't know the tax code well enough to avoid paying the exact amount that we're supposed to for taxes. Whereas some of the rich, they hire smart people who have learned to game the tax code and save them money on taxes.
Right. And you said we're getting more incentivized. It is a little tricky, so we'll go through this. We're more incentivized to invest than for our wages. It seems like for the tax code, and this really gets tricky with people. But hey, let's go. If you make nothing, then you don't pay too much tax, but you're making nothing anyway, right? So it's like the more that you work your way up at becoming more successful, making more money, the more money gets taken from you, which is why I say, hey, buy assets and just let them ride because you're going to pay 20%, year over year when you do decide to tax it. But yeah, I see what you're saying there. Now you tell me, I guess I haven't thought about this. You said tell me why it's worse. Why it's worse to, I guess it's going to be for those people who start making, I wish there was an actual bracket here. 20, do you know what it is? Let me see, on income 20 less.
Yeah, no.
I don't know what it is. And this thing always changes. Who knows what's going on? Either way, let's say 100K, right? Once you start making 100K, let's just do this as an example. You start getting taxed more on 100K, which is what it takes to live. Should people be more incentivized to actually work, or should they be taxed less for work than assets, in your opinion, and why?
Right. So here's my thing. I think it's less about assets versus work, right? I think it's more about what we spend things on. I think a better tax code would be more driven towards consumer spending. So a tax code that kind of puts a sales tax, national sales tax, might be a better a way of avoiding incentivizing people to earn more money. Because at the end of the day, our GDP is largely dependent on consumer spending, is it not?
Yeah,
Right.
yeah,
So if
yeah.
our GDP is a lot dependent on consumer spending, we want people to be able to spend more. If they're being taxed at a higher rate and they're having a struggle to being able to afford what they've got, they're not going to spend more. They're going to spend less. So instead of telling them, hey, go make 150 or 200 grand a year, but we're going to take 30% of your paycheck. Why not take 20% of the paycheck, just kind of a universal tax code where you pay percentage of flat tax rate and then have a sales tax to offset that, because then you're going to see the people who are making more money, they're going to spend more money. That money that they're spending, they're going to be paying a sales tax. And that sales tax is the revenue that you really see offset the flat tax rate on the average worker.
Okay, so you're saying just keep the tax code one tax for people's incomes, right? And then the more they spend, the more tax they're going to generate for the government, right?
Yep.
But don't increase the taxes on the people. I guess that's tricky. Don't increase the taxes on individuals based on their income bracket. Just make sure that they know more. The more they spend, the more they're giving, right? So the economy keeps
Yep.
rolling, but they can kind of average it out. Okay, I don't want to spend. I'm not going to get taxed as much. But if I do spend, I'm helping the economy out, and I'm going to get taxed. You're not really getting taxed more though. You're just you have more control, right? You have more
Yeah.
control.
Right.
Okay.
You can decide on how much you're going to pay in taxes. And I mean, the other part about this is okay, so you don't go spend, you invest it. All right. You're still going to pay taxes on that money that you invested. So again, there's no real loss there. And I think what it does is it gives us the ability to help the average American be able to afford to live in America, while also giving them the opportunity to have more money in their pockets and spend how they like. Again, we're consumer spending driven. What better way to give people more money to go spend than cut the tax rate so that everybody's paying the same, and it's effectively the same because of how much you make. You're just going to be paying a certain percentage of how much you make. Now the rest of that goes back to you. Now you can go spend it or you can invest it. Either way, you're going to do one or the other, right?
Right. Okay. Fair enough. Fair enough. Any questions on that? Because that does get tricky down the road. It's always comes down to social engineering, right? My biggest thing is if people don't want to, I think the more effort you put into the economy, the more effort you put into getting better, the more incentive you should have, right? Whatever that is, the least like I'm sorry, you lazy people out here. I'm just gonna say you lazy bastards. You guys should. I don't want to say you should get taxed more, but you should have less incentive. You have less incentive because you're doing nothing. You're wasting. Life takes effort to create. You can't just have a kid have a kid and just do nothing because you're going to hurt that kid, right? You have to work harder when you have a kid. So I think there should be less incentive. So, hey, if you do build a company, you get taxed 20%. Go ahead and let's go ahead and tax them less, or give them an incentive if they can build more jobs, right? If they can create or can do something where they can create more jobs for other people. That's what I would say. It sounds good in theory. Obviously, it's way more difficult, right? Who's in the White House? Who's doing what? So it always comes down to productivity. I think that's what it is with the economy right now is if we go in a recession, the four components are, does GDP go negative? I don't think so, because I think the government keeps spending either way, so it doesn't look negative. Employment goes down. Well, that is one thing we could track, but I think the more government spending, they might teeter 4.2% because more manufacturing jobs that we know that can be manipulated. I was telling my mom this. I was like, you can't manipulate GDP, but you can manipulate the jobs because that's soft data, right? It's like a sentiment indicator. It's bull crap. It's old. It's a legacy system, whatever. Now, the economic activity, this is the tricky one, Josh, that I heard on the podcast the other day, which was the ISM, the PMIs aren't very accurate now. Not that they're not accurate, but they don't tell you the full picture simply because they're more, I think he said diffusion index. I'm not even going to use that simply because um, a lot of supply chain managers or CEOs have been bracing for a recession because of
Yeah.
because of the Fed. So they're a little more negative. They're trying to be more conservative. So therefore the ISM looks worse than it actually is. Does that kind of make sense?
Oh yeah, and it's spot on. I mean, you got to remember these guys are looking at it from a perspective they don't want to get caught with their pants down. So a lot of them
Right.
are looking at it from the perspective that we're going to brace for the worst, and we're going to talk about talk about it that way. But what we may be doing in the back rooms may not indicate exactly what we're saying.
Right. Exactly. So the market changes, right? The markets change the way that if it was easy, if we all had a blueprint, we would all be successful. So
Yep.
that's why I'm always looking for what is it that everybody is consensus on, because they're probably wrong. Not about everything,
Yeah,
but
I mean, we're most of the time. I think I was listening to a podcast last night too, and it was talking about how we are unbelievably terrible at predicting what markets are going to do. Unbelievably
right,
terrible.
right. We're bad at it. It's yeah. So that's hey, that's why I got a job, because people are wrong, and I'm like, I'm gonna bet against you. Not all the time though, right? I mean, obviously
No,
there's the evidence changes a little bit, but I thought that was interesting. Okay, so taxes. I mean, damn. Do you think the White House increases taxes or do you think they're too scared to increase
oh, the
taxes?
2024 tax code was already released, and it's an increase.
For next year? It's an increase.
Yeah.
Golly. Okay, I didn't even look at that. Damn, yeah, this presidential cycle, all the I was gonna ask you about Vivek too. What do you think about Vivek?
I don't trust the guy as far as I could throw him. Sorry.
You don't trust him?
Just period in the story. I don't trust him. I've heard rumors he's a plant. He's saying a lot of the right things, right? So he's well spoken, but I don't necessarily believe him. I do think some of his ideas are revolutionary and probably a pretty good idea because we need to change. I mean, the political system in the United States needs to change. There needs to be some oversight as far as the three-letter agencies, and his talk about how his first day on the job he would fire 50% of the government workforce. I don't think that that's a terrible idea because of the bureaucracy and the red tape. It's costing the American people a ton of money, and it's hurting our budget. I think a lot of what the government does could be done with less. And I think there's a lot of overspending by the government, especially with some of the different things that they do. Money gets spent on things, and God knows where it ends up. I mean, you've seen the rumors, you've heard the stories about politicians getting rich, either with insider trading information because they're voting on stuff and they're turning around and have these large stock portfolios. I mean, you look at some of the net worth of some of these politicians, and it's ridiculous. So I think there needs to be some major changes, and I think he's got some pretty revolutionary and great ideas, but I just don't trust him.
Okay. Is it because he's younger than you?
No, I have no problem with his age. In fact, I would love to see a younger president in office. I think with some fresh ideas. I just there's too much of what he says that I've heard before from
Hmm.
other politicians that after they've gotten into office never came through on what they promised.
So he's a little.
So I
Let me put it this way. It sounds like what you're saying is it's a red flag when you get this sensationalism, right? Tesla's going to 5 trillion, Bitcoin going to 1 million. It's a little sensationalist because too, I like him. I like Vivek. I love it, right? I
no,
love
I
it,
do too. I mean,
but
I think he's got some great ideas. I just don't trust him.
you just don't trust it. Yeah. Okay. That could be your wisdom too. Cause me, I'm like, well, I mean, I don't think he beats Trump for sure, but Trump got stuff done. Vivek, it's kind of questionable. I think he's really running for the next election. I don't even think it's this one. I think he's running for, you know what I'm saying, down the road. And
Yeah, I
so,
mean, he could be the
yeah,
next Ross Perot. I mean, it's just one of those
uh,
things where you have these in every single, presidential cycle. There's that one guy. I mean, it's just like Robert Kennedy. He's kind of the wild horse, that third party type system. Again, they have great ideas and they're a little bit out there. But do you trust that they're going to be able to get done what they say they want to get done? Because it's not as easy as they make it sound, right? The
right,
president
right.
doesn't have that much power.
Hmm.
Really the president's job for the United States is really having to navigate both sides of the parties and getting things kind of negotiated to get them done, because at the end of the day you can't just say this is how it's going to be, because we don't live in a dictatorship. So because
Right.
of the political system that we have, you can have all these wonderful ideas, but can you get them done? And I don't necessarily believe that he can, especially with the political environment that we're in. Obviously, if he were to win, um, that means you're probably going to see a change in the guard as far as the House and the Senate. And does that mean that he's able to get things done because it provides him the support he needs within those places, or do they give him the counter? Because I mean, that's the other part about this that a lot of people miss. Usually in presidential cycles, when the president wins, the House and the Senate is usually or typically can be controlled by the other house, or the other party, and that's where you see the disconnect and the inability to actually get things done.
Okay.
But I mean, you mentioned earlier, you're a little bit younger. You don't necessarily haven't seen as many of these presidential cycles or seen kind of how some of these presidents work and these presidential elections work, as far as who's winning, who's doing what, and how sensational they are. But I mean, I was all for Barack Obama. I'm a Republican. I'm more of a libertarian than anything else. But I loved what Barack Obama was saying. He was great at his speeches. I mean, he was a great orator. And some of the things that he was talking about, I was pretty much on board with. And when he got into office, he really could not perform on any of those items. And I think it came down to he may have had great ideas, but could he get them done? And that's where you really have to be careful when you're voting for a president. You have to understand that they may have all these wonderful ideas, but how likely are they going to be able to implement these? Because how much power do they have? An executive order. He can throw out a bunch of executive orders, but eventually that's gonna backfire on him, because the people in the House and the Senate be like, you're stepping over our toes, and here's an impeachment. So you really have to find, there's a fine line that they have to walk. So you really have to be careful when you're looking at people with these grand ideas on how they're going to fix the government. Can they actually get them done?
So they're basically political pickup artists selling the dream.
Yeah.
Okay. 100%. All right. Remember you talked about, you heard something about stimulus checks last time we
Hmm.
talked, I think. What's any progress on that, or what do
I
you say?
haven't
What
seen
was
any
that?
more on it.
Mhm.
Well, you got to remember, with what's going on in the House, there's not a lot getting done. I think the speaker's finally kind of showing his true colors. So with the continuing resolution, he's fighting to actually kind of break up the budget. So he's going to do it in increments. So he won't be doing a big omnibus kind of bill. His plan is to vote on specific things as far as the budget's concerned, get that resolved, and then do another section of the budget. So this could be a test run for the single line item bills that a lot of the Republicans have been pushing for. And this is kind of, testing the waters to see if it can be successful. So I think until we actually see them get some things done in the House and there's some clarity as far as being able to take action and get some of these bills passed. It's going to be a while before we see any stimulus checks, but
Okay.
who knows? I mean, you have the presidential election coming up. If if the consumer's feeling it and they're not really happy with where things are economically, you could see the Biden administration push really hard for some sort of stimulus to try to bring back some favor for him in the election.
So it could be like, okay, if you guys pass, because it sounds like he can't just do it. He needs the House, the Senate, right? So it could be like, for example, okay, we're gonna give out these stimulus checks. We know you guys don't want it, but we'll go ahead and increase security on the border. We'll do something for the border, or we'll do something in
And
your favor.
that's how it always is, right? But
Right.
they got to be careful because they're talking about how they don't want any Ukraine funds tied with Israeli funds. They don't want any border security funds tied with Ukraine funds. So they're already kind of putting their line in the sand saying, "Hey, we don't want things mixed together." So they can't go and ask for things to be mixed together later on for certain things that they want. So again, they're walking a fine line to figure out exactly how much they can get away with, what they can do, and I think that's going to be a true telltale sign as to, are they going to be able to do the single line item bills, or are they going to have to keep mixing things in together to be able to get them to pass? Like you said, we'll give you a stimulus check, but you got to give us money for the border. That would be in opposition of what they've been saying. Like, we're not tying Ukraine funds to any of the stuff that we want to pass. So if they do that, they're talking out both sides of their mouth, and they could be viewed as, not sticking with their guns.
Okay, yeah, that gets pretty tricky. I guess we're gonna have to go month by month. This is a wild financial, political. This is gonna be interesting. Like, you're not gonna be short of news going into this year. Okay.
Nope.
Let's go ahead and jump to the housing market real quick. Do you think the gas? Well, I wanted to ask this too. This is kind of side by side. Do you think the fall in gas prices is enough to boost consumer, or not to boost consumer spending, but to ease the burden? Do you think it's enough, or does it not matter? Is it not that big of a deal? Is it enough to keep them from, you know, a significant collapse in credit card delinquencies?
No.
No.
I don't think
Okay.
so. And I mean, you're still paying a pretty penny at the gas pump, and that's where the consumer sees a lot of this. I mean, they don't really care about oil prices; they care about the gas prices, and gas prices are still fairly high. We haven't really seen those come down. So I think until you really see gas prices come down, and I don't know how much of that's going to happen. Right here, I'm in California, and California has so many taxes on its gas because I think they're trying to steer us away from gas powered cars with
Hmm.
economics, right? So raise the price of gas, keep people from spending money on gas and buying gas powered cars, push them towards electrical cars, and they're going to get what they want. So there's a lot of things going on that I don't really think that the oil prices have had or will have a major impact on consumer spending or their debt anytime soon.
Okay, probably just on markets. I'm thinking it affects markets
Yeah.
the most because traders are like not necessarily have anything to do with the economy. They're just like, okay, let's get short oil. Inflation comes down, stock market goes higher because it can still earn, which is why I preach get long the best assets because your wages are not going up, and nobody cares about your how much you make. So join the rich
Yep.
people. You can't beat them, join them.
Woo!
And guess what? They can't even the rich people aren't even in crypto right now. So I'm always making that argument for
Well,
crypto.
I saw an interesting prediction. Somebody I follow, I think his name's Timothy James.
Mhm.
He's calling for a Bitcoin crash of about down to 5,000 mid 2024.
Bro, the dude's on crack. I'll tell you right now. If I don't know what the hell he's talking about,
Mm,
I'll debate him right now.
he's
Let's
saying
go.
that he's saying there's going to be a run up before it halves, and then after it halves, it's going to start to tank.
It could. I think so. Right now, Coinbase, biggest U.S. exchange, right? What people don't realize is that they're about to stop their lending program on the 21st. It's somewhere around there, which is next week, which means all the Bitcoin people borrowed from 2022, they're going to have to pay back their collateral. So I think you do get a pullback. Number one. Number two, let's say it's not a big impact. Well, it's really possible if crypto or Bitcoin, anyways, runs up to like 40,000 and then the ETF comes out, it could be sell the news event, right? So you get that retracement back down. So you're
Yeah,
gonna get a correction. Crypto does this, but what I'm saying is 5K, bro, that is a crisis. 5K is a pandemic. 5K would be because 70% of the supply, which is why I'd crush this guy in a debate, 70% of the supply is held by people who don't ever move their crypto. Bitcoin,
They're not
crypto
going to
could
move it. Yeah,
crash,
yeah,
right? They're
they're
not going to move
holders.
it. They're holders. And the ETF, I'm sorry, people are more greedy than they are fearful. The ETF is going to bring in a crap load. Even if the price drop, boom, that's even more. They're going to get more excited. That dude's on crack. These dudes are, I'm sorry, these fools are idiots when it comes to certain things, right? They just see risk assets going lower. Hey, other cryptos will crash bad. They will because they don't have the same fundamentals. But Bitcoin is not crashing to 5K without a huge black swan event. That's insane. Um, oh my God. I get worked up on that.
Yeah, I just wanted to throw that out there with you, man, because I know you're a big crypto
Yeah,
bull.
yeah.
So
And I'm not even all in Bitcoin. It's just I'm not even a big like I'm not even holding that much Bitcoin, barely any. I'm more on the riskier side because we're at the bottom of the cycle, but that's a whole nother story. Now with the rates coming down, let's go to the rates. Anyways, that guy, yeah, tell him I'll debate him. No, I'm just kidding. You probably don't know him, but I think it's
I
funny.
don't
It's
even
how
know him, but yeah,
people make these. It's sensationalism, like you said with Vivek. It's just sensationalism. People get scared. They tune in. They want to see it.
they want
It is
clicks.
they want clicks, bro. It's like, dude, yes, Bitcoin could come back to 30K, 25. It's not going to freaking, are you kidding me? That is psychotic. Anyway, let's go to the yields. My next question was like, does this move in yields? Let me see, how far are we down now? Is this let me see, how did I phrase it? Is this gonna help mortgage demand? What are we
Oh yeah,
down?
I mean it's going to help a little bit. I'll tell you right now, there was actually a survey done, and 50% of homeowners said they would be willing to sell and move and buy a new house if rates hit 5.5%. So 50% of the U.S. homeowners said that they would be willing to sell their house and buy another house if rates hit 5.5%. That's how rate driven um, the real estate market is. Another 3.1 million people said they'd be willing to get back into the housing market, whether buy another property once rates hit 6.5%. So I think the average 30-year fixed is at like 7.235, something like that, something stupid. But the mortgage interest rates right now are in the high sixes. So I think you're going to see a huge uptick in real estate as far as demand for buying real estate, especially if rates continue to get lower. And obviously, with the inflation numbers, we're seeing good positive reaction to it in the bond market, which is great for rates.
Let's see, I think I could find it here. 30-year. We at 7.4. Okay, that'd be a pretty good drop then.
Yeah.
Yeah, that'd be a big drop. Okay, so we haven't came. So it looks like yields are falling a lot faster than mortgage rates.
Yep.
Bond yields are falling a lot, but it's kind of a leading indicator yields, right? So these
It
probably
is.
trickle
Yeah.
lower. What's keeping this from
Yeah, and I
falling
mean,
faster?
again, you're dealing with the credit tightening. So you got to remember these banks have to have the funds and the reserves to be able to lend money. And with what happened with bonds, and because a lot of these banks bought bonds to offset the lending that they were doing, and as they've started to see unrealized losses on those bonds, they either have to basically capitalize the fact that they've had these losses on paper and lower the amount that they're able to lend, or the government's going to have to step in and say something like, hey, you don't have to recognize these losses, we'll help you with some sort of credit swap, do something to help you offset these unrealized losses in your treasuries that you hold, so that you can continue to lend. But as again, with the increase in interest rates, their bond holdings and their treasury holdings are reporting these massive losses for these banks. So that means they can't lend as much. So if
Right.
people aren't turning over and they're not refinancing or selling their homes and those mortgages are coming off their books, they don't have that much more room to lend more money. So what do the banks have to do? They have to keep interest rates higher to try to keep the demand from skyrocketing and not being able to balance what they've got. And so that's what
Okay.
you're really seeing.
It's tricky, man. It's like there's no clear path, right? It's I think the Fed has
No.
to step in at some point. I think they buy back. I think I tweeted this earlier. I was like, look, at the end of the day, the Fed's either going to lower rates to get things going again when they see inflation has made enough progress, which nobody agrees on if it has or not, or they're just going to start buying back treasuries and ease the banks, right? I think which one comes
Yep.
first? My bet is that, damn, this is a tough one. My bet is they actually, I don't know. What do you think? What do you think
Ask
they
your,
do?
ask yourself this, right? So they have to have credibility, right? So what did they say about rates? They're not going to touch them for a year. So if they
Right.
go back and they pivot on rates, their credibility is lost. So
Okay.
what is one thing that they haven't talked about? Quantitative easing. They have
Mhm.
not said we're not going to do quantitative easing for a year. They have said that they're unwinding their position in treasuries, which they've been doing at a pretty steady rate pace, but that's not going to mess with their credibility if they go back and they say, hey, you know what, we're gonna tweak in quantitative easing again. We'll offset some of the stuff we're unwinding, so we'll repurchase some new stuff. We'll sell off some of the old stuff, but we'll increase it. We'll increase the purchasing enough that it offsets what we're selling, and ease that for the banks.
That makes 100%. I agree with you. I agree with you because if it is about credibility, they didn't lie. We didn't cut rates, but we are
Exactly.
doing something like this where, okay, we're going to start purchasing. And there's just no way. I mean, if we look at, oh, shoot, that's not it. If we look at this, and this is global liquidity, by the way, which is going to, they're kind of the same thing because China's stimulating like crazy. They have no choice. Japan's doing it. But yeah, this thing, I mean, they've made it go flat for a while, but we haven't been able to really fall for an extended period of time since 2001. Like, we just don't do that. We just go sideways and then we move higher. I think this is the steepest fall we've had, right? So at some
Yeah, yeah,
point,
yeah. I mean, this
this,
is that's what they said they wanted to do, and I think that's them trying to clear their books a little bit so that they have some room to do something. Because if they didn't do that, and all of a sudden they had to pivot and start quantitative easing, we're just
right,
going to increase our balance. No, they don't want that, right? So they want to see how much of it they can get away with, right, before
right.
they have to do something, because then that makes it a little bit easier for them to justify it. But they've been aggressive with it, and I think that's the main culprit behind this, or the reason why they're doing that, is so that they can keep their credibility and pivot in a different way.
No, you're right. That's true. And two, come on, they've slow they've been this is a shadow QE. They've been once this runs out, that's my guess. Maybe this is what happens once it runs out in I think summertime. Maybe that's when they start.
Hmm.
Okay, we're actually going to stop selling so much treasuries. They don't start buying back, but maybe they stop selling them to the market, and then we see the Fed's balance sheet go sideways, and then eventually, it starts to move up. Maybe, who knows? But that makes 100% sense. Is that they orchestrate the Fed balance sheet, and this is why crypto is going to rip, because it literally is the most sensitive asset towards quantitative easing at any level. So we should expect that. And this is just, this is the global liquidity. So even if they don't, I know this is more of an asset thing, but even if they don't, the world governments are starting to ease. So when I see people on social media say liquidity is poor, it is, but I mean it's pretty much bottomed out. So like, you want to invest when liquidity's pumping. You want to invest right before, because you're going to get the most gains. Anyways, going back to it, somebody asked, why are rent prices dropping? I actually just saw this
Ah,
today.
yep,
Oops. Actually, yeah.
that's
We'll
easy.
go
Increase in supply.
increase in supply. Um,
More homes for long-term rent, right? So, everybody was talking about the Airbnb crash. They were assuming that those people were going to try to sell those homes. Most of those Airbnb owners are now turning those into long-term rentals. So now they're hitting the market as a long-term rental, which then brings rent prices down because it increases the supply of long-term rentals. Before, they weren't on the market for people to rent long-term, they were short-term rentals. So you see that, coupled with the fact that you have builders who are building more multi-unit complexes for rent.
Wait, so you're telling me that they're turning their Airbnbs into literal long-term rentals? What? I did not. So
Go
these,
look at the statistics. So Airbnb, right? Airbnb hosts were getting slammed because they weren't getting people who were actually using their rentals
right.
because of the cost, because of the economy. So they were starting to lose money. So the next thing that you would assume that they would have to do is sell the home. Well, actually, most of them turned them into long-term rentals. So now people are able to find more options for being able to rent, which is bringing prices down. I mean, it's happening everywhere. I was talking about this last time. We've seen rent prices soften here in California a little bit because, again, the increase of supply.
Okay. Wow. Oh, that's what I was gonna look at. Okay, so Damn. So this is kind of a good setup. You see, Josh, why I'm so optimistic. It just seems like when something gets bad, something gets better. I mean, that's how I take it. Maybe I'm reading it wrong.
Yeah. No, I totally agree.
I think, oh, I had it over here. Here it is. NFIB. There we go. Home. So this is not this is basically the home builder sentiment. This is not actually reflecting what we're talking about then, right?
No, no, that
No.
is single family residence. Those are the homes that you're going to buy from a builder because you're going to purchase a house. And a lot of those guys they're not happy. I mean, with rates where they're at, they're having to give away the house to be able to get people into the homes, and they've got to get them sold because they can't have them, sitting there empty. So you're seeing them throw out lots of incentives. You've seen some of them cut some of the prices. Again, they got into this and started building these homes in a time where demand was going down. So if you're increasing supply, you're only hurting yourself. So that's why, a lot of these builders, you can get a 5.5% interest rate, sometimes even 5% interest rate at them because they're giving away so many incentives. They're buying the interest rate down for the consumer so that they can actually get into the house. And again, that we talked about it, that interest rate number that people are really looking for is 5.5%. And that's what they're getting from the builders.
Mm,
So it's keeping them from, getting caught with their pants down again. So but again, that's not what they're there for. They don't want to give away the incentives. They are there for their profit margins. They were much happier when rates were 3% and they were getting people offering 30, 40, 50, $60,000 over, didn't have to give away any incentives. People were upgrading everything. Now you're not seeing people do upgrades on the homes. They're getting the base models. They're still getting, a 6% builder credit towards their closing costs, which they're buying the interest rate down 3%. They're not making as much on every
so they're
transaction because
they're
they're
just
just trying to get through their inventory,
so they're just
and so they're
treading
not happy.
water. They're just
Yep,
treading water, and if they don't tread water, they drown.
yep,
Okay, so they're forced. So the winner almost is the consumer who isn't who doesn't own a home. The consumer who wants to rent, who needs to rent, they're the winner if they bought Bitcoin. Okay, that makes sense.
yep. There you
Um,
go.
it's
Bitcoin.
a change. My whole thing is I think the market is changing again. I've been here since 2018. I didn't know what the hell was going on for years. I knew technicals, I knew fundamentals, and then I'm like, what is this macro stuff? Because I got burned in 2022, right? I got burned. And I was like, okay, I am not gonna stop until I understand this picture. And I think the macro is showing me that the market does change. It starts reacting different to different scenarios in the past. It doesn't react the same. So I think that's kind of what I'm
Yeah,
seeing here. And looks like the living standards are not living standards, but the way people rent or live is going to be changing drastically also. Um, Let me see. Okay. So now you live in, did you guys have any more questions? So is this a buyer's market? That's a tricky question, huh?
yes, it is. It is. It's not really a tricky question. I think there was a survey done, or statistics showed. I think it was somewhere around 43% of sellers are willing to do some sort of concession or concessions to help buyers get into the homes. Um, it's a lot different than what it was, and I think anybody that tells you any different isn't actually selling any real estate, or they haven't in a long while. Because on a day-to-day basis, everybody that we're pre-approving, it's a simple conversation. When you go to negotiate the sales contract, you're going to ask for the house, you're going to ask for everything, ask for the 6% seller concession. They're going to try to negotiate with you. That's fine. Especially with these homes sitting on the market longer, which they are, right? The average time on market is now over 30 days. It's shifting to a buyer's market, and it's already there to a certain extent. It's only going to get better for the buyers unless interest rates drop to 5.5%. Then you could see a flurry of demand and not a lot of supply, unless the statistics or the survey was correct. And those who said we're just waiting for rates to hit 5.5% to sell our house, then you're going to see that increase in supply, like we talked about, right? They kind of go hand in hand. What happens, right? How do they level themselves out? But I don't think you're going to see a huge increase in price. You're still going to see lots of sellers willing to give concessions. It is a buyer's market right now.
Okay. It's a buyer's market. And either way, I'm thinking too, in from where you're at, you guys kind of look forward to, it's not like today, it's like going forward, things should be improving for the buyer versus getting worse, where you hear everything's getting worse, right? You hear things are getting worse. Maybe for the real people who are stuck, who are really deep. I had a guy come up to me in the coffee shop. I've been doing real estate. He's all, you do crypto? He's like, man, what? Because he was like, shoot, man, I'm making no money. I'm in the water. So it sounds like
Yep.
things have shifted a little bit. And that's how the market should go, though, right? It shouldn't be a monopoly in one place
Yeah.
forever. Crypto does great, but Josh, for 2 years, crypto's trash, right? Get out, like, don't even be in it. So everything changes. You got to adapt. You got to learn. You got to educate yourself. This is not a free ride. Nothing is, one dude asked me the other day too. He's like, hey, I heard about options. Should I do options? I'm like, bro, I've been doing options for 3 years and I still make big mistakes. Don't do options. You're 55 years old, 60 years old. Just invest. The old adage, buy low, is literally the best thing to do. But people want, like, they're scared to buy low. They're scared. So if you're a new real estate guy, isn't this an opportunity for new real estate buyers also?
Yeah. No, I
Yeah.
mean, this is, again, in a buyer's market, asking for large seller concessions, you're going to see it help you in a great way. I mean, don't get me wrong, rates aren't great, but if you can buy the rate down to 6 or 5%, that's a great way for you to get into the house. I don't see home prices crashing. Again, where do the homes come from? Where does that inventory come from? And I think that's where people are scared that we hit some sort of top in the real estate market. The market prices are going to crash. So if I buy now, my home's going to be worth less than I bought it for. Maybe a little bit because of the slowdown. But again, you have to have an increase in supply for that to really happen. So where does that come from?
Right. So
So if we
offset
really
it.
see a soft landing, right? If you see the soft landing that you're fairly bullish about, there's no housing crash.
Right. So you guys heard it. Your housing prices are not going to crash. So just hedge it by buying crypto. It's always the answer, guys.
Yeah.
Buy more Bitcoin. Um, so you live in Josh, you live in I don't want to, we're gonna be respectful of his time. You live in California, you probably see Teslas every day. Am I right?
Every day,
All over the
everywhere.
place.
Oh my
Josh,
lord! I can't wait for Sunday. I'm going to be going over to local park, and there will probably be about 60 Teslas versus the 250 cars that are there.
bro, that's crazy. That's what my friend, he lives in Orange County. He's like, dude, I see like 6 Teslas at the stoplight. And
Bay Area too.
people don't even know, like, The Rock was on Joe Rogan the other day. He didn't even know the Cybertruck was a thing. And I'm like, that's crazy how you live in one region and you're like, Tesla's taking over. You
Yep.
live somewhere else, you're like, Tesla's gonna die. There's no demand, right? But my question is, why don't you own Tesla stock? Being in California, I feel like all Californians are bullish on
I
Tesla.
do own Tesla stock.
Oh, you do? Okay, I was wrong about that one. Okay, you do. So he's bullish on Tesla. That's funny. It's crazy how people in other areas though would be like, they tell me they're like, I don't know, Tesla's kind of shaky. It's like $700 billion bigger than every company. Grow Model Y, best selling car. People on TikTok are like, bro, Tesla is gonna crash. There's more demand for blah blah blah. And I'm like, wow, this is why I have the opportunity, because the
There's no
misinformation,
alternative to it.
government
Even
supporting it,
even the big even the big even the big automakers are scrapping their big EV battery projects. I mean,
right?
that's the hard facts are, if we are moving to electric cars, Tesla is the golden child when it comes to electric vehicles.
Very true. What was I gonna say? Do you own a Tesla?
No, I don't.
No. Would you do you want one, or are you just like, I'd rather own the stock?
I'm not a big fan of them. I don't like the fact that I would be reliant on charging my car when there's an electrical grid problem. Whether they decide to turn off the electricity. I mean, there's a lot of issues that I see running with it, and I mean, obviously, it's the same thing with a gas car, oil embargoes, but it's not like gas will ever run out. So at the end of the day, it's just a matter of I'm not a huge fan in the Tesla car itself. I'm not a car driver. I drive a truck.
Oh, okay. So okay, that's the other thing too,
The
is like,
Cybertruck.
yeah, the cyber, well, the truck people who love like, people love trucks. They're not just, oh, I
Yep.
drive a car, I drive it.
Nope.
I'm not a truck guy. I'm like, this is too big, it's too clunky. I feel uncomfortable, right? That's me. I rather have something small to fit in, whatever. I was a running back, I was running between people.
Yep.
But yeah, they hate it. They're like, oh, that's trash. I'll never get the Cybertruck. That's going to be interesting, the truck market. So there's just a lot of opportunity for change going forward. and people love their trucks. That's going to be a tough market to crack. But dang, if Ford and GM, those are the biggest truck. I believe those. Or I guess Tacoma is pretty big too. If they don't like, they're going to get like, what are they going to do if things switch? You're getting rebates for electric vehicles. I think Tesla needs to come out with something other than the Cybertruck. I mean, I'm a
They do.
fan of it, but it's a one-off thing. It's not like the Cybertruck is the big market. They say it is. We'll see. I think it's gonna flop at first, unless the only way it doesn't flop is if like I think police, I don't know how this works, but like police or first responders adopt it because it's bulletproof, it's fast. That's the only way I see it really getting some traction, right? I think I don't know. I'm not a truck guy, so I don't know how appeasing it is. It looks cool, but it's so weird. I don't know. Um, what about Bitcoin? Why don't you own Bitcoin? That'd be my next question.
That's a good question.
And this is
I'm
this is not a
still
got
not.
you. This is
Yeah,
not a
yeah, no,
got
no,
you
no.
question. I want to know.
I'm still not 100% sure the path forward for Bitcoin. Again, you've got governments who pretty much have to sign off on the currency, right? And until some major government adopts Bitcoin, I don't see a way forward for Bitcoin to really be a long-term fix to the currency issue. And my fear is that there's going to be something that the governments do that prevent people from being able to utilize the Bitcoin. It's just for me, it's the uncertain path forward for Bitcoin going into the future. It worries me that it's not something that can make it through some sort of, I mean, adoption in the grand scheme of
Right.
things. You know what I mean?
What if I told you Bitcoin isn't really like the whole currency narrative is false? What if I told you it's not actually meant to be a currency at all, the way people believe it to be or say it is? It's old. The new research or the new Bitcoiners, there's maxis, there's psychos that think Bitcoin is everything. You should buy nothing but Bitcoins. I've talked to guys that are so crazy. They're like, everything's a scam but Bitcoin. I'm like, bruh, you're living in a house. Is that a scam? Like, you're using dollars, right? So it's not really a currency. It's actually more like, where what if I told you it's more of a commodity? It's more like gold. Um, and it is actually, the SEC is actually labeling it as a commodity, so it's more like gold. It's not meant to transact. It's meant to just store value, like a glorified savings account. It does everything that gold does. It can't be debased. It can't be replicated. You can't like you can't make it inflate. You can't do nothing like that. But it's more. But it's a digitized gold. As we head into this digital world, we see e-commerce, right? Everything's going digital, digital money, whatever. So it's more of a store of value versus a currency. And I know you haven't thought about this, so I'm just throwing it out there. Think of it like that. It's
I
more
actually
of
have.
a. Oh, you have? Okay.
Yeah, no, I mean it's more of a commodity, and I understand that. But my question to you then is that where is the value in that commodity? Yeah, I mean, yes, it is a commodity, and it is limited to the amount that there is. My question is, okay, but where do we assign it its value?
I'm going to show you right now. This is the crazy thing about asset prices. So where does it assign its value? This is really the primary value of Bitcoin. All right, Josh. It's up. It just keeps going higher. The supply goes lower, right? Just like a commodity, less supply, more demand. So the the number one thing is the price goes way higher. It outperforms. So this is just like an example. And I get what you're saying. Well, shit, I'd be the one that gets in and then it never goes up again, right? That's how a lot of people feel. So I think the number one thing is like the price has shown for 10 years, it outperforms absolutely everything other than the cryptos it's competing with. But that is a good question. What is its actual value? Because you don't want to just speculate, right? And the
Right.
value of Bitcoin is that the hyper rich people, they try to diversify, they try to hedge against inflation. And I think
Of
that's the number
course.
one thing is it is an inflation hedge, but it's not an inflation oil prices are high or gas price. It's not that inflation. It's a monetary inflation hedge. Therefore, inflation doesn't start when you see inflation rate going higher. It's always here. Inflation always exists. It starts it really starts when the Fed starts printing money, when they start
Yeah.
easing. So
Or when the
that's
government starts printing money. Yeah.
Right, when the government starts printing money. So typically gold moves up when it's a monetary hedge. Gold is a monetary hedge. And it's hard to think of because it's not physical, but gold's a monetary hedge. You could say equities are a monetary hedge, right? Software companies are a monetary hedge. There's more of a software. I think that's where people get confused. You can't see software, right? You can't see how it works, but we all use it. It's not something you can hold. It's just something implemented in the digital world, on the internet, right? On the web. So that's where the utility is it is a digital software that acts as a store of value, and it performs. It has and it has evidence, it has history that when there's a monetary inflationary event or monetary printing, it outperforms gold. It's like 5x stronger than gold. That's what I would say.
Yeah, and I mean that has a lot to do with the fact that we know that gold is not as limited as we thought it was, right? We're finding more and more gold every day. So
Mhm.
I think that's the problem with something like gold. But again, at the end of the day, the value is that it's a ledger, right? The transactions can't go away. We know it's there. It's being recorded, and that's what the blockchain is for. But where is the value in that for somebody other than the fact that it's a place to invest money and it could go up, it could go down, right? Because it can go
Mhm.
down
Right.
as inflationary pressure comes down, it can lose value, just like gold can, or gold
Right.
lose value because there's more supply because we find out there's more gold. We know that there's not going to be any more supply of blockchain. So that gets it finite, it's limited. But again, where is the value in the blockchain itself? Where does it create some sort of actual
How about this? How about this? You can move large amounts of money faster than any other amount of money, across to China, to Asia, whatever it
Yep.
is,
Right,
billions of
which is
dollars.
great, right?
Mhm.
But where does that get adopted in the sense that more people are using it? Because I think it again, Bitcoin goes to the moon if it becomes an adopted universal worldwide currency or blockchain. And I
Mhm.
think that's where, for me, until I see it actually be adopted by some sort of government, where because again, blockchain's value is based off the US dollar currency, right? Because we give it a dollar amount value because it is Bitcoin. That's how much it's worth to us because it can be converted back to a dollar. But at what point does the actual Bitcoin current or Bitcoin itself have its own value in the sense that we use that in a monetary transaction?
Oh, we count it. We use it as a unit of account. Is I don't know if you went out or what. As a unit of account, right? Unit of account. Like
Yeah,
I don't even think it matters if we count it in. I think we're always going to count it in US dollars. That narrative was an old one. I think it's literally a store value. And you're able to transact big sums of money very quickly at the cheapest rate by far, not even close. Um, and again, I would say, like, what was the value of a mobile phone before it came out, right? The value's in the future. So that's like, to me, it's the price appreciation. So maybe I'm looking at it differently, but I'm like, well, shit, it's going higher either way. One of the signals would be, well, why is BlackRock, the biggest asset managers, adopting it, right? Why are all these banks talking about blockchain? Because I think there's a new layer for transacting money.
of course. And
And
I think that's the adoption part
yeah,
of it. If I could see a clear path forward with
okay,
the
see a
adoption
clear
of it,
path.
I
Mhm.
think that would be something that would give me more confidence in actually
Right.
owning Bitcoin. Because
Okay.
again, you want to, you're not going to compare it to the other coins, right? But
Mhm.
look at all the other meme tokens, right? They've all gone to shit. They're all worthless. So, at, does that exist or does that happen with Bitcoin because something else gets adopted and Bitcoin loses its value because of that, right? Because
Right.
again, adoption is important in this because if people aren't using it, there's really no value. So if there's a CBDC that they don't transact in Bitcoin, and that CBDC is what people have to use to be able to do transactions, that takes the value out of the Bitcoin. Yes, it's a store of value, but again, if it's not being adopted and used on a larger scale and not widely adopted, you lose the value in Bitcoin in that respect. So again, if there's a clear path forward for adoption, then I'm all for it because I do believe in digital currency. I think that
Right.
is the way of
No,
the
that's
future.
fair. Yeah, that's
And I
fair.
think the other problem that you run into is that um, again, Bitcoin's got to stay. out of government, right? Because if the government has any sort of control over Bitcoin in that respect, they can control the money flow. They can control what you can use, what you can spend, and that's another big concern for people. So, how do we find our way forward so that it can be adopted? Because it's going to be mixed in, or we're going to end up with some sort of digital currency for the U.S. dollar. I mean,
Right,
that's what they want
100%.
to do. So again, how do they interact? What's the adoption rate? How is it used? What sort of government interaction are we going to have on it? I think that's a lot of the uncertainty around it that
Mhm.
concerns me about Bitcoin and being invested in it again.
Right. No, there's a case for anti-confiscation from government. Kind of like there's not another asset that you can do that with. They
Yeah,
can steal your gold. So anti-confiscation is one of them. The other one is they have this thing called the Lightning Network, and what it does is it acts as a faster network. So because Bitcoin's not made to actually buy small things, it's acting as a smaller network, right? Or a big network. It's not meant to transact quick. It does take 10 minutes for it to actually transact. It takes about 10 minutes. It's slow. So the Lightning Network allows you to do something instantly. And I would say too, like equities, whatever it is, at the end of the day, people want something to go higher. The supply and demand is, whatever. But the use case is really hard for people to understand because it doesn't exist. And I would just say, well, damn, by the time people see it or
it'll
understand it,
be it'll
it's
be skyrocketed.
yeah,
Yeah,
it'll be
I
so
mean
you'd actually be more interested in something like Chainlink then, I'm
yeah,
guessing,
which
because
I've
that's what
invested in.
oh, okay, you have. Oh, because you saw that
Yeah,
move, huh? Did you see that move from
yeah, I did.
that thing moved? Yeah, yeah, that's what's up. Okay, cool. And that's why I'm bullish on Chainlink, not because I don't like Bitcoin, but I'm like, this thing is way smaller. It's 100th of the size, and the use
Yep.
case is fucking easy. Are you
Yeah,
kidding
I
me?
mean, and it's universal. There's so much that you can use it for. The adoption of
Right.
it would be, to the moon. So I think that's for me. That's kind of where I saw that, and I was like, that makes a lot more sense to me.
Right. Okay. Yeah, that's clear. Okay, I love that. That's good. That's good. Great. All right, Josh, I'm gonna respect your time. I think I have three. I want to do something real quick before you go. Just give me a one word answer.
Okay,
And I'm gonna say a couple things. One word answer. Let's go. Jerome Powell.
scary,
Elon Musk.
awesome,
Ray Dalio.
fearmonger,
Um damn, what's her name? Who's the lady running for Senate, or not Senate, but that was running in the election? What's her name?
Nikki Haley,
Nikki Haley. Yeah, Nikki Haley.
Wicked Witch of the East.
Okay, yeah, quick. Um,
You heard what she wants to do with social media. She wants everybody's name to be up there, and that no more handles. You have to have your name, and you have to be identified on social media. Like
really, I didn't know that.
she wants big government. It's scary.
Wow, I did not know that. Yeah, that's why I like Vivek calling
Mhm.
her out. That's insane. I wish I had that. I ain't gonna lie. Sometimes, like, bro, what's your name? Who are you? Let me see.
Yeah,
But
no, I get that all the time because people are like,
right,
"Oh yeah, I just applied," and I'm like, "Okay, you didn't apply as Mrs. Tootie Booty, but what's your real life name so I can look it up?"
truck runner 85.6
Yeah,
green
yeah.
24. You're like,
Mm-hmm.
yeah. Okay, cool. Um, Donald Trump. It's a tough one.
Hmm. I'm gonna say businessman,
Good. Joe Rogan.
smart dude,
Joe Biden.
decrepit.
Decrepit. Okay, that's all I had for you, Josh. Hey, I appreciate your knowledge. All as always, when things come up, we'll have that conversation with the politics kind of intersecting with the macro, because I don't know anybody else who knows it as good as you. So I appreciate you, man. Thank you
Hey,
for
no, I
joining me.
appreciate you having me, brother.
All right, take it easy. Have a
Have a
good
good day,
weekend.
man.
All right, chat. I know some of you guys are thinking, what's going on with the market? What's going on? I think Sleepy Joe, yeah, Sleepy Joe. That was good. That was a lot of information on what's kind of happening with the with politics and all that. Let's see. S&P's looking pretty well. I think what we're gonna do is a different stream. I'm gonna stream probably on Sunday, go over the macro. I'm writing some stuff up, working on it. So let's do that. If you had any immediate, actually, let me leave it open for a couple questions for the market. If you guys had any questions on anything, what do I see going on? What's up with the dollar is just getting crushed right now. I would say this, guys, is that crypto is giving you that pullback right now. Crypto is offering the pullback. The confirmation is here. I'll pull up let me throw up hold on. Let me run to the restroom real quick and I'll be right back. I'll just give you my take on what I see is going on in the market right now. Okay. I'll be right back. Let me make this a little bigger and then get your questions, comments ready. We'll go through that and then we'll finish out that way. Let me throw on a little bit of music while we wait. I'll be right back. All right, let's get it. What do we got? TikTok, jump over to YouTube if you got any questions. All right, what do we got, guys? What's going on? What's your price target to add more on Link? Good question. I've actually been adding incrementally, and again, it's going to be personalized for everybody. I bought at 1350. I bought at 13. I think it goes down at the lowest to 1250. It's scary. It could drop fast, right? If the crypto market really does fall. But I'm gonna say, oops. I'm gonna say for Chainlink, let's do some evaluate. There's a lot of buyers. There's a lot of buyers stepping in here. What's our 50% retracement? Let's see. Should we go from the breakout? So from the breakout, 1270. We pretty much got there. I'm gonna say the bottom is 1250. That's what I want to say. I want to say the bottom is 1250. Look, I could be wrong. It could just sink, but I am leveraged in a way that I want to buy at 1250. And then that's probably where I'm done buying 1250, but I am scaling on the way down. Let's go to that daily chart. And it's also in a pattern, right? So it is showing a pretty easy pattern for us to identify, which is you could just wait and wait and wait, but it could break out on you. You never know. So I like to buy these lows that are coming into the trend, right? Because we're also pulling into the longer term trend. It's not just, I mean, you could argue the trend broke, right? This is the trend break right here. But it was a very steep trend. That thing exploded. Very steep trend there. So it's not really holding that trend. Is there a lower? No, there's not really. There really isn't. I think that's it. So I'd look at it as a hard support somewhere around 11 to 12. Right, 11 to 12, 1250 the way it's moving. It's all going to come down to the bigger market. I think Bitcoin and Ethereum. If you see Ethereum get shook really bad, then like if it comes down to like 16 or 15, I'm thinking Chainlink comes down to like 12, 11, 10, right? But if it doesn't, if it just kind of sticks around here at this previous breakout, I think it goes to 13, 1250 at the lowest, right? Bitcoin, if Bitcoin drops to, let's say it goes back to the breakout point, which is about 30K, 33K, Chainlink comes back to 10. So it's nobody knows, but I am definitely scaling in, right? Yeah, I'm scaling in. I'm more confident it definitely goes higher over the next 6 months. So I'm just gonna scale in here. Sam Altman fired by OpenAI. Interesting. Interesting. Didn't know that. Yeah, nobody knows what's really gonna happen, which is why I just scale in because I think we're at the turn. I think we're at the turn when I add all the variables together. I think we're at the turn. But here's the positive, right? This is why I am scaling in for the most part. When I look at these macro forces, what do I see? I see the dollar easing financial conditions, risk on, right? I see the dollar signaling risk on, less dollar investment. That those dollars are being invested somewhere. It looks like there's a big bid in the small caps. The small caps have had a pretty violent rally from the lows. I mean, at one point they were up 12%, but I guess that's kind of equal to the Qs. So you're seeing risks being taken in big tech and also in small caps. Look, the Qs actually rallied more than the small caps. That's insane from the lows. And you getting consolidation at the highs. Usually you'll get a pullback. You're not getting that. You're getting consolidation, which tells me this thing could move up. It's still holding that moving average on the RSI. Once you get above 70 on the RSI, we're not there yet. Like, it's more likely we do pull back, but the fact that we're consolidating sideways, I know people might say other stuff. I'm going to say it's getting ready to break out, just like it did back here. Where is it where we broke out? I think we consolidate. Yeah, we had this consolidation. See, we broke out of this trend. It looks very similar. Broke out of this trend to the upside, retested the highs. Okay. Retested the highs for 4 or 5 days, and then boom, broke out. And then we come back, we find some support. That's what it's looking like. It's looking like we are doing the same thing. We're retesting these highs. Okay, 4 or 5 days, a week, breakout, come back, check the breakout, hold, and then move higher. That's what it looks like on a technical basis. That's what it looks like on a technical basis, right? So you're getting the dollar rollover even bigger. You're getting yields rollover, right? 10-year yields. The cost of capital for markets are rolling over. Very clear head and shoulders. You get a little baby one right there. What the hell, bro? Yo, how did I get banned? Are you kidding me? Anyways, wow. Another violation on TikTok. Guess I'll be on YouTube. So yeah, you get that breakdown. Let's see, what is this for? You're getting yields really slide. See what they come down to. So that's going to help out right there. Oil, right? Oil is making lower highs, lower high, lower high, lower high. There's your big high, lower high, lower high. That's going to ease conditions. So these macro forces are easing, which is in favor of risk assets moving higher. Period. That's the backdrop. That is the backdrop right there. See if there's any big movement. Retailers, they're moving up kind of. Gas is okay. Consumer discretionary, utilities, real estate had a pretty nice rally. Who is this? Oh, tech. Yeah, tech's breaking out. This is interesting. The actual tech ETF, the S&P tech ETF is at all-time highs. So that's a signal right there. We are at all-time highs for the S&P tech sector ETF. Home builders still stuck. Industrials. Oh, industrials have a sharp move higher. Caterpillar's probably doing well. Financials very steep. This looks like a very strong bull market. Very strong bull market. Much stronger than people expected. I just appealed it. Yeah, I just appealed it. I don't know why that happened. Did I say something crazy? I thought I was saying crazy stuff when I was talking to Josh. The hell? That's crazy. Unless we had somebody jump on and just ban me. SMH, I think this is at all-time highs. Yep. Semiconductor ETF all-time highs. This is a bull market. We're back into a bull market. The Fed is done. Like I said, the Fed is done. You know what I'm gonna do before we close out? I'm gonna go to my Twitter and just kind of go over my rant for today. There's not a whole lot. We have next week, we have the FOMC minutes on Tuesday. That's about it. I think it's gonna be clear. The Fed is done. Inflation is not defeated yet, but it's going to be very bullish for the market. We possibly pull back into that, into that report. What is KRE doing? That's a big signal. KRE is recovering, pretty nice recovery for regional banks. The VIX, this is another big one. The VIX looks like the volatility of the VIX is starting to roll over. That's when the VIX really gets crushed. We'll see if it keeps going lower. The VIX is below 15 again. Very strong level. What up, Brian? What is timing of link supply to get to 100% circulation? Currently around 55% in circulation. I'm not sure I understand your question. What is timing of links supply to get to 100% circulation? Isaiah, you understand what he's asking there? Can you ask that a little more clear, Brian? So VIX, yeah, VIX is picking up. Put to call ratio. Let's see where this is at. This is a good sentiment indicator. It's starting to roll over. It peaked back in November. What is the timing of them to drop more supply to get 100%? Oh, to drop more supply? I don't know. You're talking about the actual developers creating more supply, putting in circulation? Yes, Link has about 15% yearly inflation rate. Okay, so there you go. 15% inflation rate. That's a good question. That's a really good question. Really good question there. Definitely going to pay attention to the fundamentals. I think those questions are going to be really important as we hit the top of the cycle, because that's where you get 4,000 hour. Wait, oh, footage? No way. House Speaker Johnson. Uh-oh, we got some more political news. When does it get to its max supply? Oh, I see what you're saying. Out of 1 billion. So it has that inflation rate of 15%, 5 to 6 years. There you go. There's your answer. See, I'm not smart enough to answer that. That's your guy right there, Isaiah Fielder. That's my brother. He's the tokenomics expert. I'm not that expert, so but appreciate the question. I might not know the answer, but I'll find somebody who does. Either way, the cycle's going higher. What else was I going to look at here? Is it TLT moving up? Oh yeah, TLT, the bond market is starting to catch a bid here. And this is another reason we're going to have a vicious rally probably next week. At some point we get a pullback, we get a rally, we'll see the macro. The macro tells you what's going on. The fundamentals tells you what to invest in. So you got fundamentals, what or who is the best bet. Fundamentals is who is the best bet. Technicals is where. Macro is what the hell's going on. So start with the macro, what the hell's going on, so we kind of know. Fundamentally, who should you be invested in? Who should you trade? Technically is where and how much. I don't want to say how much. I'd rather say where. Where do you get in, right? And right now, TLT is showing, you can see this clearly, it's about to break out. As a matter of fact, it is kind of breaking out. Reverse head and shoulders. Okay. This will cause rates to fall significantly, right? 10-year, 2-year, 5-year, whatever it is. This is going to cause rates to come down even further. Today we made new lows, 438. Maybe we come back down to 4%, 4.2. Either way, that is going to pump risk assets, especially because it should move the dollar lower. So we expect the dollar to find support around 102.50 again. Right? If the dollar just keeps sinking, it's over. This is the turn. This is the turn we've been talking about, right? Dollar peak, turn. That's the turn. Okay, that is the turn. Yields peak. This is where you get the most alpha on the trade, on the long hold. Yields peak, that's the turn. Oil is not as important as the turn, but I think oil peaked for the next 6 months. I think it peaked. I don't see oil going higher. That's the turn. Lower growth, better valuations. You're in long options on TLT. Okay, just be careful because if the economy roars back, you as long as you're far enough out, because eventually the Fed's going to cut, or maybe they don't cut, maybe they just ease. So you're hoping for a recession. You're hoping for growth to slow, and you need that. You need growth to slow. Either way, I like TLT. I just don't like it as good. I think it has a little more risks. In the short term, it looks pretty good. If you have like a long option, TLT probably explodes. And then I don't know if it goes back to all-time highs though, because that would be rates at the lows. That's the only thing I don't think is going to happen. Whereas Qs, right? The Qs as an index, looking at ETFs, I mean, it can just keep running because it's not going to be held back by the structural forces. It's not going to be held back by the structural forces. That's the big difference there. What else do we have? Betting on rates dropping over the short term. I think the Fed does cut rates. It looks like right now the market is pricing in the Fed to cut rates in the summertime. Let me double check that. And then we'll look at the future, what we got going on with futures. Let's see how the market's pricing this in. CME. Almost like the closer you get to recession, the better that risk assets or the better that risk assets / technology performs. Let's see where we at. 100% chance. Wow, that the Fed does not cut. 100% chance of a hold. How about January? 100% chance. Damn, the market is pricing in a pause. Where's the cuts? Here it is. The market is now, this is the first change I've seen. The market is now pricing in a cut in May. So Brian, that's your trade. I hope your contract's out further than May. The bond market should move up into those cuts. Maybe pull back and then go up again, but May is the point where it starts. That the market is pricing in anyway. Looks straight. Let's see, what else do I have on here? I have oh, here it is. All right. Ooh, big long day. So I this is my thesis. Let's go over it. Very bullish macro setup. We talked about this. The setup for risk assets. The Fed is becoming more dovish. You had a lot of Fed speakers. They were all pretty dovish. Take that off. They were all pretty dovish. So I think we're at a point where there's no doubt the market has priced in the end of the cycle. It's over. Why? Simply because inflation is falling. Headline was at 0%. Month over month. 0%. Poor. It's poor inflation. Poorflation. It's over. The inflation is over. Anybody else that tells you otherwise, they're full of shit. Inflation is over. It's done. It doesn't mean it's crushed, but from here, looking forward, it's done. Crude oil pricing in recession, that's really puts the nail in the coffin. Crude oil just falling the way it does. Enough supply from the US, lower demand, it's over. Bond yields peaked when Ackman covered. They talk about crypto being manipulated. Bro, Bill Ackman covered his short. The whole bond market, which is 32 trillion, stopped going up. I mean, started going up, yields stopped going up. Dollar trend lower. This is the one I'm unsure about. I'm actually unsure if the dollar continues to go lower. There are scenarios where the dollar can keep going up. Oil falls, it actually helps the dollar go up a little bit because you're selling into dollars. If you head into recession, typically the dollar actually goes higher into a recession because people are selling risk. But in this case, it could be the opposite. We are seeing that correlation fall apart. And I think primarily that if we're headed more to slowing or recession or slowing, typically people sell into dollars for protection. But in this case, rates are coming down, so they're more so buying bonds. So those dollars are going into the bond market. The rest of the dollars are saying, "Oh, lower rates, let's go into tech." So it's a weird trade because you're getting high risk on, and you're getting protection in the bond market at the same time. Bonds go higher, stocks go higher. Bullish. Oh, volatility is low, very bullish. Recession or soft landing. Would you say there, Brian? TLT represents the long end of the treasury market and carries a duration of 16 years, which means a 1% fall in rates will cause roughly a 16% rise in bond prices. Oh, I've never done the math that way. So TLT should boom. I mean, shoot, if you're right about that, buy them leap bonds. Leap bonds? Leap TLT? That'd be a nice trade. People are getting into TMF too. Isn't that the 3x leverage? 3x leverage. I don't know if it's short or long rates, but TMF is like 3x leverage. Recession, soft landing, right? I think we're headed for a soft landing. I think this will be the first one in history, unless we have a black swan. Employment is softening, but still positive. GDP growth softening, still positive. Activity is mixed. Negative manufacturing activity. Okay, we did kind of dip. New orders are down. But positive services. And you saw the baby boomers, right? The older generation, they're still spending on services. Plus, you have all the gig economy, right? The people doing Uber, Lyft, was it Instacart, people doing OnlyFans. I don't know if I can say that. OnlyFans, YouTubers, these young guys making millions and women that are making a lot of money. Bro, they are buying experiences. So I just don't think this economy slows down altogether. Maybe in some areas, right? There's going to be jobs. You have immigration coming in too. Consumer is slowing this quarter, but they still have jobs. They still have jobs. And come on, the White House, we'll get to that. They're not going to allow this economy to collapse. They're more likely to re-stimulate a little bit of inflation before the economy collapses. Companies are becoming more efficient. This is why the market's going higher. They're just becoming more efficient. So are consumers. They're dropping goods. They're not buying the stuff they used to. They're spending it on services, which I don't know if that's really smart, but they're doing it. They're probably investing too. I think a lot more people are investing. Fiscal stimulus equals more spending, right? Inflation Reduction Act, CHIPS Act, infrastructure bill, more spending, more jobs, more growth. Higher rates also, high rates are high, we're going to get crushed. Higher rates, yes, commercial real estate. Irresponsible business owners, irresponsible, or maybe they just got caught off guard. They're going to get hit. But higher rates are also juicing fixed income. Rich people with fixed income, they're getting juiced. For every $2.5 million of cash that a person has, they're going to yield about $9,000 a month of income. I was trying to do these calculations last night, or maybe did it get up to 10,000? No, 10,000. So 10,000 a month is about $2.5 million of income for these people, right? That's it. 2.5 million is giving you 10,000 a month. So more spending, bro, period. More spending. And that's not even counting their assets. Biden administration trigger happy, bro. These guys are trigger happy pre-election year. More what? More what? More stimulus, bro. More stimulus. It's coming. So I say here, be selective. The market is adapting to new conditions. This is a new market. It is starting to change. This is where, hey, you get caught off guard, but you got to pay attention to what's happening, what's actually changing, not just listen to the same people say the same SHIT over again. The market is starting to change. The dollar's diverging from rates. S&P is going up. Profit margins are up. We're heading to a pre-election year where it's way more likely the market is going to be excited about it because there's going to be a lot of promises. There's going to be a lot of pandering to the consumer. Basically, recession proof going into election year. And then you get the recession during the next year, right? So be selective. I mean, blockchain, electric vehicles, AI, robotics. I don't know if robotics is ready yet. Genomics. I don't know if it's ready yet. AI, semiconductors. You see Nvidia, not Nvidia. Well, Nvidia is coming up next week. That's the next catalyst. AMD absolutely ripping. Went down to 93 and it's at 122. Insane. So at the end of the day, what the Fed will end up paying the U.S. debt interest payments through the balance sheet. They're gonna end up paying the rates, right? Or they cut rates, but I think it's more likely they just pay the debt. They just pay the debt. They start buying the U.S. Treasuries. They pay off the interest. As always, watch the Fed's balance sheet. This probably doesn't come into play till next year, but we're gonna watch it. It's probably gonna come into play. Why do I say mid 2024? Because this is when shadow QE runs out of money. This is when the Fed's reverse repo runs out. Mid 2024. So reverse repo runs out, the Fed's balance sheet starts to stop selling treasuries, stop selling debt, starts buying debt, or just stop selling it, right? And I'm going to argue here also Apple, Microsoft, Amazon, Google, Meta, those are all now value slash growth stocks. They're not just growth stocks, they're value stocks. So even in a recession, they're going to grow. You're not getting rid of your iPhone. You're not going to stop ordering off Amazon. You're either on Facebook or Instagram. There's like half the world on there every day. Two-thirds of the internet is built on Amazon and Microsoft Cloud, right? I bet you could throw Google in there too. I just wasn't sure. The demand for monetary inflation hedges like Bitcoin, Ethereum, gold is starting to accelerate. Thus, the big move in Bitcoin. Gold's been moving up. They're sniffing out more stimulus in 2023, 2024. The demand for real world assets, tokenization is accelerating. This is why we're so bullish on Chainlink. The demand for AI, Tehran, no, I'm just kidding. Demand for AI is accelerating. NVIDIA, TSM, what the hell is that? AMD, Intel, I think really AMD, Palantir, don't forget about Palantir. That thing is moving. The demand for EVs is accelerating. Tesla hasn't even made its move yet. It's still waiting. It's still waiting. So, I mean, it's coming. You heard it here. Bull market, Santa Claus rally, maybe a pullback after that. I'll stay up to date. When I see something change, I'll let you know. But right now, it's looking like a very strong Santa Claus rally. Would you say, like Negan said in The Walking Dead, people are resources? People are resources, 100%. They're the most resourceful. Short 1x, TBF short 1x leverage on daily move. TBT is short 2x. Wow, I didn't know that. So people have been leveraging in there. TBF and TBT. Well, they're done. They're probably getting smoked, right? They're getting smoked. Well, stay tuned to the I'm gonna write something this weekend. Here's what's gonna happen, guys. I'm gonna let you guys know. I'm building the course, right? Macro cycles. I say a lot of stuff, but I'm putting it in a very organized manner where you can digest it. It's simple, a lot of visuals, concepts that are easier to understand, right? And not only that, once it makes sense for you, and I'm gonna need some feedback, then what I'm gonna do is turn the newsletter. It's not gonna be free anymore. Okay, I've done free content for a long time. It's not going to be free anymore, but it's also going to be every couple weeks, and it's going to match up with the macro. I could maybe I changed my mind on it, but I think I'm going to do that. So we're going to do the newsletter, and it's going to be on Sundays. So you can have fun on your Saturday, do what you got to do. I'll be live still, probably be doing the lives. Sunday comes, you get it Sunday morning before noon. Okay, so then you can get ready for the next day. You can get your technicals, macro technicals, any fundamentals that are changing in the market, right? That's what the idea is right now. So you're going to have the course, you can't learn everything in one sitting, but as you watch the course, as you learn off the course, then you can look at all the resources I use. You can refer to the newsletter so you can see how I'm thinking about the course. Because here's the thing, I don't want to dumb down the newsletter. I don't want to dumb it down. I rather answer questions live, right? So you guys have real-time questions. The newsletter can't answer questions. I'm going to keep it high level. So when you get to that higher level, you're more confident about your trades. You're more confident about your investing. You're more confident about learning the business cycle because the newsletter is going to have the business cycle in it, right? It'll have the business cycle in it. So you'll have evidence to back your thesis. That's kind of the idea. Maybe it changes. But I'm working on that. I'll stay tuned. And if you guys got any feedback on the content, how I should make it better, please let me know in the comments, whatever it is. Anyways, I'm gonna get going here. I appreciate you guys. Look, let me check my messages. I think we're doing a live. Are we doing a live? Okay, my partner's working a double shift again. We're trying to get the fitness going. I know some people don't care as much, but we're trying to get the fitness going also. If we fail, we fail, whatever. Okay, cool. So he's working a double shift again. And I don't want to just tell you guys something that we don't do. And I've made that mistake. I apologize. I've made that mistake in the past where something doesn't work out. And I've talked to him about it. Aaron Okinga, I've told him, hey, we got to be legit. We got to be consistent. Can't just say we're gonna do it and then you end up working. And yes, I am calling him out because he knows I'm gonna call him out. Um, pull no punches, right? If I'm late, I'm late. If I suck, I suck. Call me out. Let me know. Give me some criticism. Either way, we do want to get that fitness stuff going because there's mostly men on here. You got to get in shape. It's gonna help you out with your energy. You're gonna be more attractive. You're gonna feel better. You need to be more masculine. Some of you guys are already in shape, cool, whatever. But all these things are gonna help you with your investing anyway. What's the point of making all this money if you're a chump? There is no point. Got to keep grinding, keep getting better, whatever it is, right? So, and hey, I like bringing on Josh because we also got to learn politics so we vote correctly. So we also have a mind that can decipher values, right? The best values going forward for ourselves, so we don't get fooled by the politicians. That's also good because most people, they might be, maybe they're good at investing, maybe they can trade, maybe they do go to the gym, but they have no clue what the hell is going on in the world. And I think you guys should be informed about that. You might be more informed than me, but it's important to know what the hell is going on in the world so you don't get fooled, so you don't get scammed, right? By these high level scam artists, right? So I think that's important. Anyways, we're at the beginning stages. I appreciate you guys staying tuned. As always, stay blessed. All glory to God. Stay blessed. Have a good weekend. Be safe. Have fun. Catch you guys next time. Thank you.